Morning, Steve here in Chicago. Overnight grain markets are basically unchanged in corn, beans down about a penny, and wheat down about 4 cents. Today we get export sales, but it's as of December 27th, so the USDA is still slow in catching up with the data. Some people think that the soybean market trade has been disappointing since the Chinese came in and said they would buy that 5 million tons of additional U.S. soybeans. We've actually been about unchanged since then. It's interesting in the bean market, if we take out the 914 support in the March beans, it suggests we go down to 902 or basically $9. It's disappointing that the market couldn't last Friday push through 931. If we eventually do push through that, we might test 947 or 950. So we're still in that trading range, but we're getting closer to some prices, especially on the downside, that if we break below, we could go lower. South American weather is good with rains in Brazil and mostly dry conditions in Argentina. We'll see tomorrow what the USDA thinks the Brazil crop and Argentine crops are. There are some people that are bringing the Brazil crop down. The problem I have with that is that China imports might be down just as much. And this 5 million tons that the Chinese bought recently from the United States is probably less buying they'll do in Brazil. As far as the corn market is concerned, it continues to struggle for data. Tomorrow we should get a lot of information as far as what the last year's crop was and see what the USDA wants to do with global and U.S. supply and demand numbers. Most of the numbers in corn should be positive. Technically, March corn retested support at 375. A break below could take us down to 370. Resistance is 381. A trade above 381 and a quarter could allow us to creep closer to 390. The problem about getting close to the upper side of that price is the farmer is a willing seller of the market on rallies. And in the wheat market, we continue to hope for some export demand to help prices move a little bit higher. Nearby wheat may test 522 support. A break below that could actually take us down to the 519 or maybe even lower. $5 has been the long-term support for March wheat. A break above the 525 and 3/4 area could lead to a rally maybe to 530. But again, 540 seems to be strong resistance that we've had since the end of 2018. There has been some talk about U.S. 2019 acres. Some people thought that there'd be less beans planted and more corn, especially because of the weak basis domestically. But now we're kind of seeing that if you look at the futures and even the cash, the soybean corn ratio actually suggests farmers should plant a little bit more beans than maybe corn, especially in areas where their corn yield isn't as big as some of the areas in like central Illinois or Iowa or west central Indiana. So again, that'll be unknown as to what we see as far as farmer plantings, but in general, they don't need to plant as many beans as the price suggests, given the close to 1 billion bushel carryout that we have here in the United States and record world carryouts of beans and declining Chinese demand. So it's raining here in Chicago. If this was the 4th of July, we'd probably be trading a lot lower. Rain does make grain, but right now it just makes us wet. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.